It's been Pattern Profits. Gonna take a look at the basic strategy I've been sharing over on X, but it has been a while since I've shared a video with you, so bear with me through this. Basically, since I've been back, I have been sharing this ES futures strategy based on time-based liquidity. I am on replay here with the ES on TradingView, and what I want to point to first is this area, this New York PM high from yesterday. See this blue line here? That is a level of liquidity that for me is going to act like a magnet. Basically, I'm starting it right around 7:30 a.m. This is what it looked like. Here is the London low, this red line, another magnet that I want to be aware of. Point of interest lower, Asian low, and yesterday, this green line, that's yesterday's AM low. Those are the levels that I usually point out every morning. Notice none of them have been swept or touched in the overnight session, unlike the Asia high here, which was swept here, and then the London high, which was also swept here early in the AM. So I'm going to fast forward through this. I am on a 5-minute chart here. You'll also see this this light blue line here. That's the midnight open. And for me, I'm using that as kind of my equilibrium level as I come into the session. Basically, if I do not have a bias, I'd be looking for short ideas above midnight open and long ideas if price is below midnight open. So as we come into the open, the New York open at 9:30, you're going to see a green box starts to form. That box is the 30-minute opening range. I do use that, especially on days when I don't really have a bias coming in. I'll rely heavily on that 30-minute opening range. Again, on a 5-minute chart, those first 6 candles, those are going to establish the opening range for me. And then you can see here, here's your opening range high, opening range low. Now I'm basically looking for a breakout in either direction. Obviously, given that we've taken the liquidity here on the upside that I had noted from that New York PM, I'm going to be looking down because that's where my levels all are below. I also try to pay a lot of attention to that first fair value gap that forms right after the opening range has been set. We'll do another video to get more details on that and some of the nuances. But I want to get the basics out there tonight so you can see as we go through that opening range kind of choppy in the morning, did not confirm. And then we do get that big breakdown here. We do so with fair value gap right here. That didn't come until right before lunchtime. So quite choppy through the morning. Had to have patience to get through that morning session, avoid this chop. Then we did get the breakdown. We got a little bit of retest. You see those wicks there, and then you got the big break. If you missed that opportunity, especially because it was over lunchtime, as so often happens, came back up, retested that opening range. This was a great opportunity here. And then again, you're still kind of above that midnight open there as we retested. So looking to the short side anyway, and all of these levels below. And that's basically where I would take an entry. If I missed here, I get it on that retest. Then we start to see price starts to break down. That first target being the London low, that's the lowest hanging fruit there. And for beginners, that's probably the best, is to just target that first liquidity pool. I'll show you why you want to do that in a moment. As you gain more experience, then have a daily bias and a bigger picture view. It's a lot easier to target these levels lower, but for now, that low-hanging fruit here, and you'll see as we kind of get through this, once you sweep that London low, then many times it'll start to consolidate here. Sometimes you get a bear flag, sometimes you get a little triangle, a little consolidation after those lows are swept, And in this case, you see the bear flag breakout there. Don't have to feel like you have to capture all of this in one trade. I often do it in multiple trades, especially depending on what time of day it is. I usually like to trade the AM session and then the PM session, kind of avoid the choppiness in lunch. But sometimes these opportunities present themselves. They're so clean, easy to keep a tight stop if you get a close back in the opening range. So if you take it here on the retest or on the original breakout, tight stop either back inside of the range, or sometimes we'll use that fair value gap right here as a stop, and then targeting the liquidity, time-based liquidity from those overnight sessions that are lower. As we continue to move through, you see you got the flag, the breakdown there, and quickly down to those Asia lows. Again, kind of consolidate there. And then it took pretty much all day. But as we got into the close, again, you had a little bounce there after sweeping Asia. And then finally, you got the breakdown late and took out the lows. I mentioned on X potential as we broke down here midday for that bearish outside day. And indeed, that's exactly what we saw with that breakdown. But like I said, had to be patient in the morning, get through this chop, and then the afternoon, steady, taking out stops and these levels and liquidity on the way down. So a few things that we'll cover, some details going forward. I'll get more into the fair value gaps. I like to pay special attention to that first one that forms after 10 o'clock, after the opening range has been formed. A lot of times that will give you a little bit of a hint as to where possibly the opening range would break down, especially if that happens within the opening range shortly after 10 a.m. Does that one hold as support or resistance, or does it invert and goes the other way? Those are some details that we'll cover down the road. But for now, the basic strategy, very easy, very simple, 100% mechanical. It can be. For those more experienced, maybe coming in with a bias, that will kind of dictate what kind of size you put on or how aggressive you want to be. Those that have absolutely no futures exposure, coming in without a bias, it's not needed. You can use those fair value gaps and the breakdown or breakout of the opening range to help guide you. So I hope this helps. Again, every morning kind of point to those levels on X, discuss some of my thoughts. I do kind of pay attention to what pattern may develop in the overnight session too. So again, there are some nuances. We'll cover that more down the road. But I hope this gives you an idea of the very simple and basic ES strategy that I've been sharing since my return to X. That's all I have for tonight. Hope you trade them well tomorrow, and I'll speak with you again soon.